All right, what's up, guys? Anthony here, Special Analysis. Welcome to the video. I want to talk about how we played commodities this morning. I'll start with crude, and then we'll take a look at gold as well. So, just kind of put some price action in perspective here. You can see we placed a really big kind of sell-off here. You can see we took a gap down during the Globex Open Sunday evening, 1800 Eastern Standard Time. So took a big gap down, continued to sell off into higher time frame support. This is identified and goes out to my swing traders. We take a push up, we regain this channel structure here, and we start working our way higher. You can see I populated two separate trend lines very specifically off of this low right here, and they really serve great purpose. So you can see this is the origin of the top trend line. We take a retest here at the VWAP, a retest here at the rolling VWAP, a phenomenal, perfect retest here at the rolling VWAP. We tested again at the rolling VWAP. I mean, guys, just really an incredible line. And when you can identify a singular line that has so much meaning to it, it really makes the balance of your day much easier. So we come in and we place a lower high, if you notice this. So we're making higher highs and higher lows until we reach this point. We break down, place a higher low, phenomenal, right? But we fail to place a higher high. So that tells me what? It tells me that there's some exhaustion going on at this level. So we come down, we then continue to place a higher low. So now I'm looking at the market really carefully thinking, is there gonna be a pop? And why do I think that there could be a pop? Because there's a little bit of a divergence between, we now set a lower high, but we've then again set a higher low. We're still respecting the rolling VWAP. Guys, I love the rolling VWAP, all right? I run two VWAPs. There's a session fixed VWAP, which is this blue line, and then my rolling VWAP is this yellow line. I am a huge proponent of using both, okay? You can see there's nothing else on my screen, right? On the left side is my higher time frame analysis, telling me where my support and resistance is based on my personal hand-drawn approach to analyzing price action, okay? So I'm monitoring this for the big picture, right? And then I'm coming down here on a 5-minute chart. I also look at a 3-minute and a 1-minute to make decisions. So right here, I liked this little convergence. I have this pullback trend line. I have this upward running trend line. This candle very specifically for me, I felt fairly confident entering the market long, at least into these highs, okay? So I'm buying at this green line right here very specifically. I always have a very specific price I want to get filled, 86.23, and I'm taking profit at the bottom of the body here, 38, okay, on this tiny little pullback. If I drew it out, it would be very, very minuscule, but it would look something like this. I just want to let the screen refresh if it's going to. But it would look something like this. This is very specifically what I'm looking for. Okay? Right there. That's where I'm looking to take my profit. And that's where I did. And I liquidated the majority of my position here. And then I was like, all right, I'm going to bump my stop just one tick into the profit and see if I can get a run towards 87. Well, as you can see, I got stopped out. The market did pull back and then ultimately did what I was expecting it to on the 9 a.m. NYMEX open for light sweet crude oil. So it did what I wanted to do, okay? It is what it is. You're going to ask, what is this red line up here and what is this green box down here? So this green box down here is where I told my big energy profits traders to consider entering the market long. And this line right here is where I sent out an email text message update recommending taking profits as we've ran about 200 ticks. So we got 80, my exact specific instructions were 84.75 to 85.25, which is what this box is the ideal area to enter. You can see once we approached this area, we absolutely plummeted right to the bottom, giving them an awesome chance to get into this market with great price improvement and then taking, phenomenal profits extraordinarily quickly. So I'll just go to the middle of the road, $85, right? And you can see here at 86.75, that's 175 ticks, and it only took what, 12 hours? So that's not bad. Like that's a lot. So I advise them to, what I would be doing at that point in time. So here nor there, we place a high, and I tell my traders, based on my higher time frame analysis, there's a pretty good chance that we did set the high for the session, right? So what does that tell us? Well, if we know we set the high for the session, there's a good chance that now we're going to be starting to look for lower highs, and that's exactly what I did. So price comes barreling down here, and to be perfectly honest with you, there was nothing along the way here that made me interested in trying to catch the falling knife or even join the falling knife on the way down. I knew I had some key levels of support, but my higher time frame support was down here, 85.40, 85.50. I think we went as low as 85.43, if I'm not mistaken. I had massive surge of selling happening here, whether that was stops getting taken out or whatever. There was a bunch of absorption here. Okay, also a bunch of absorption here. So this very specific area on two occasions provided a bunch of absorption, which means that the sellers were getting absorbed by the passive buyers. And ultimately you can see that imbalance occurred, which drove price back higher. So as price came down, price did make a push back up here. A ton of contracts got executed where this dark green line is, and then we ultimately fell into here. Now, I will only consider entering a market when a few components of my, I shouldn't say a few, all the components of my trade plan are in line. And that includes, and there's multiple approaches, right? There's trending approaches, there's reversal approaches, there's support and resistance, there's range-bound market approaches. So it really depends on what the market's offering. But I knew I had higher time frame support here. I knew there was a bunch of absorption here. I liked this candle very specifically as it closed. And you could see, took a pretty aggressive bump right here into the VWAP, right here into the rolling VWAP, right here into that trend line that was drawn much earlier this morning. Now, keeping with the theme of the sell-off, right, I told you we'd be looking for, if this was in fact the session high, at least for the morning, right, like I'm going to be looking for now a lower high. Well, where am I going to look for a lower high? This trend line, I know it may seem elementary, guys, and simple, but the foundation of my analysis is built off of trend lines because that's how it was done 100 years ago, okay? It's not a program, it's not an algorithm. It's all done by hand, okay? So I have an intimate connection with the price and the market when I'm sitting here and I'm analyzing this. So price breaks that trend line here. What was previously support now becomes resistance. Now, I don't want to just sell at any touch of this trend line. I want to very specifically meet my trade criteria, and it did transpire here in this candle. Now, I would have liked it to transpire a little closer, but here nor there, right into this candle, I had looked to get short right here at the rolling VWAP. I was hoping that price would push back up. I just put an order there at 86.20, looking for a little bit of price improvement, 4 or 5 ticks. This way, when I move my stop to break even, I got a little bit of breathing room. So market comes down, pushes through the VWAP. We pop in here, place a slightly higher low, make a correction, put in a lower high, and then we dump right back into this support where once again there's a bunch of absorption. I like this very specific candle here, and we get a push a little bit higher into this area. Now, we didn't quite get to the VWAP. We did take a little bit of a pullback. There was a little bit of absorption here. And I said, well, maybe we're going to squeeze a little bit higher, right? So what I did was I took my stop from down here and I really, really tightened it up as if I was entering the trade brand new right here. And as you can see, I got stopped out. But I got stopped out in the profit. So it's okay. All right. Did the market ultimately end up pushing higher off this area? It did. I mean, notice that we never settled below this absorption area and this specific candle here, right? Like the wick of this candle is what is my threshold, if you would. The low there is 81, so call it 80, right? Just for round numbers. Like we never settled below 80. You know, this candle closed what? Right at 80. Okay, so one tick below the threshold, which was my wick here. And what happened was when this dipped down, it knocked me out. Now, we're pushing back up here. Seems like we're finding a little resistance at the rolling VWAP. We may continue to place another lower high here. But it is what it is, guys, right? Like, one opportunity. Number 2. Number 3. Number 4. Number 5 that didn't play out so well. It's not a super clean trending day, but having a clear idea of where viable support and resistance is, I'll tell you, these two trend lines really helped analyze all of the price action, not only before the 9 o'clock open, but after it too. I mean, this was probably the best setup of the day, this short right here, right? Either this short or one of these two longs from the low down here, these were probably the better setups. I took this one hoping at the convergence of trend lines that this was going to hold and we were going to pop towards 87 bucks. But it didn't happen, right? Like, it doesn't always go as planned. So when I buy on a pullback, I entered where this green line was very specifically based on the interaction of buyers and sellers in this candle, and then this candle was the trigger candle for me. So I looked left and I said, all right, this is the level or the price that I want to get long at. And it did. It worked out great. I always take profits as soon as I approach recent support or resistance. It doesn't matter which direction I'm trading. And then I always move my stop to break even if I'm very fortunate for the market to just take off, which sometimes it does. It's good, right? And sometimes it doesn't. And that's okay too. It just is what it is. You get stopped out. I try to put my stop one tick above my entry. And the reason I do that is because there's normally some slippage. So, if I lose that tick covering the bid ask, it's okay. I can live with it, but if I just made $1,000, I don't want to give 200 of it back. You know what I mean? So that just is what it is. So I want to just kind of walk you through how I read the market today, and how important it is to, identify very simplistic trend lines. I know it sounds elementary and sounds silly, but on my chart, this is my chart, right? This is it. I have a reference chart off to the side that has pivots on it and all that stuff, and moving averages and the MACD and all the traditional, momentum and volume stuff. But the chart I trade on, look at how clean it is. It has 2 VWAPs on it. Volume in the background here. And then price action. Because I need to be able to see what price is doing unobstructed. Right? The reference charts that I provide my clients are designed to be just that. Reference charts. They're not designed to be traded on. Why? Because they're too congested. You start to lose the vision of the bigger picture because you're looking at too many lines, right? For me, I can decide what exactly it is I'm looking for here. I can look right at my reference screen and say, okay, I'm good in this component here. I can look left at my order flow and go, okay, I like the way my order flow looks. I'm looking at liquidity on the book map. I'm looking at the tape, which is time and sales. I'm looking at volume profile for the session. I'm looking at delta volume profile for the session. And then I'm looking at a footprint chart, looking at the delta, looking, for absorption. Like I said, these are all areas of absorption identified by looking at the depth of market, by looking at the tape, by looking at the footprint, by looking at the book map, and looking at liquidity and all the other components that help me make these low risk decisions. I see it very simply. Either I'm right based on the candle, a candle or two candles, maybe two or three candles, or I'm wrong. And if I'm wrong, that's where I place my stop, right? Your stop should always be placed where your analysis has been proven wrong. Guys, this is something I fought with for a lot of years. It was a tough struggle for me because I had a really difficult time losing. I just did. That was probably my biggest, is my biggest hurdle as a trader. Knowing that I'm going to take losses when I don't want to take losses. Like, it's an ego thing. And it's something that every day I have to train myself before I come to the computer to understand that losses are simply part of the process. Okay? I'm not always going to be right. I want to be, but I'm not always going to be. And in fact, more often than not, I'm going to be wrong. And that's something as a trader you have to accept. You must be able to cut your losses quickly and be able to hold on to your winners for as long as you're possibly able to. Okay? As long as the market allows you to. And I always tell my traders, as soon as you start paying yourself, meaning starting to sell or cover part of your position, it's time to start protecting yourself, advancing your stop to your entry, a few ticks into the profit, whatever it is. I'm not here to dictate a trade plan. I'm here to analyze and interpret the market and then provide expectations for what may or may not happen, right? I talked all the way through all the expectations and the analysis as price action was transpiring. Now, gold was another phenomenal setup this morning, and I want to show it to you. All right, I'll dial it out here. You can see we placed a high over here, then we got kind of choppy, kind of crummy. We just eked through these highs, probably grabbed whatever liquidity was here right around 7 a.m. We started setting lower highs and lower lows. Now, this thick black line here is a key level based off of hand-drawn analysis, like I showed you, on the other chart. I do that for all four markets: NASDAQ, S&P, light sweet crude oil, and gold futures. I also look at volume analysis, meaning I take a very close look at where high volume is being transacted in the market, where low volume is being transacted in the market on much higher time frames. So notice we take a break of this higher time frame resistance level, and I drew this line right here saying, hey guys, if we come back to this line and hold it, we're going to probably sell off. And that's what happened, right? We consolidated, we broke, we retraced right into what was previously some form of support, right? That got broken. It's now considered resistance. So once upon a time it was demand, and now it's supply. We retest it, put this wick in, settle below it, and in 3 candles, we absolutely plummet, right? There's where we settle, and here's where we pull into a high volume analysis area, 123 ticks. Now I told them, I said, listen, as we approach the prior low in the VWAP, that's the time to take profit, because that would be the area that if price is going to bounce back up, that's probably where it's going to happen. Pay yourself, protect yourself, boom, here we go. And we then talked very specifically about this candle. Notice the ultra high buying volume. Well, that retraced us. Retraced us to where? Resistance, right? Or supply. Push back down, push back up, push back down. Again, a high buying candle here at this low. You can see down here, not as aggressive as it was earlier in the morning, but it's certainly there. And we've reversed off of that and stayed off of that ever since. So just want to give you guys kind of a walkthrough, some insight to how this morning played out on the commodities that we watch. I'm not going to get into the indices. They were a little crappy this morning, so we really just stayed focused on what's working. That's the reason why we look at 4 markets, so that we can dedicate our attention to markets that are offering something. So I appreciate each and every one of you. God bless. I look forward to seeing you in the next video, and I hope you have a wonderful day.